Greetings, everybody. This is Dan Gardner from Trade Facilitators Incorporated, and I'm showing 10:30 a.m. West Coast time. So we're going to get underway with this week's complimentary webinar entitled Letters of Credit and Import and Export Perspective. As always, a couple of housekeeping items. We have quite a few people online. Actually, I was surprised at the reception because letters of credit have been around for quite some time, but remain very relevant in the world of international trade. But with that number of people, we have to keep the mic muted, and you can write in your questions and we'll answer them as we go. And also, if you have questions, there's an email at the end. If you have questions after the fact, you can send them and we'll try to answer them also. As is the case with every webinar that we do, we offer a complimentary PDF copy. Your only job is to write to an email address that is also provided at the end of the webinar, and we will gladly send it to you at no obligation. As I mentioned a moment ago, letters of credit are an important subject. They've actually been around as a payment mechanism, because that's what we're talking about here, a payment mechanism between international sellers and buyers that has been around literally for 500 years, going back to the earliest days of organized trade in Europe, into the Americas, et cetera, et cetera. They remain relevant, and we're going to look at them from both an import and export perspective. They're applicable to whether you're an importer, an exporter, and even a 3PL or a freight forwarder that might be online, because freight forwarders have a role to play in the execution, or what's referred to as the negotiation, of letters of credit as well. We'll talk more about that later, but that has mainly to do with the fact that the freight forwarder oftentimes, not always, but oftentimes cuts the transport document, a bill of lading, an airway bill, et cetera, that is likely to be required as part of a letter of credit documentation package. All right, let's get down to it here. Quick disclaimer, for those of you who have been online before, you know that we're not lawyers, and we have to tell you that, so this isn't legal advice. It's probably the fastest slide we'll have today. Pretty basic agenda. We'll provide a definition of letters of credit, or LCs as they're called. We'll quickly go through the types of letters of credit that are available. We'll focus on one in particular, but there are different types of LCs. And then we're going to stop and slow things down maybe a little bit, but go over bank terminology and definitions. Banks are always going to be involved in a letter of credit. There's no way around it. It's just the very nature of an LC. While not the most exciting part of the presentation, if you don't understand the terminology, what's a beneficiary? Who's the issuing bank? What does negotiation really mean? What does performance mean? It just doesn't make any sense to talk about the subject without providing a foundation, if you will, for terminology and definitions. We have some good visuals that help to lay out the banking process, the buyer-seller process, et cetera. We have an actual example of a letter of credit we'll be showing. So it won't be all doom and gloom from the boredom perspective. It'll be some good stuff that helps to bring the story to life. We'll get into potential clauses to include in an LC as you, either a buyer or a seller of goods, negotiate the terms of payment within the context of a letter of credit, and then the documents that might be called for in a letter of credit. Quick intro to TFI Trade Facilitators. That's the company that I founded some many years ago here in Los Angeles. We do supply chain consulting and training, basically. We're next to the LA Long Beach Port Complex in a town called Palos Verdes. Anything to do with international transportation, the technology side, the process side, the physical movement of goods side. We help importers and exporters to design integrated logistics programs. As a part of that, we provide advisory services for U.S. Customs and Border Protection and partner government agencies. We are licensed customs brokers here. We do a lot of consulting for digital startups focused on logistics and supply chain. And needless to say, these webinars being a reflection of this part of our business, we do a lot of training on topics specific to global trade. And last bullet point, last but not least, we are the #1 producer of online material for universities, trade associations, and private entities in the United States, specific to virtually any topic related to global trade. So that's enough on TFI. Let's get down to business here. As we said, and I noticed we had a couple of people come in a couple of minutes late. If you have questions, type them in. We're on a muted mic. We'll get to them. If you want a copy of the presentation, just write in to an email address we provide at the end of the presentation, and we will send it to you. Letters of credit defined. I mentioned already that LCs as a payment mechanism. This is about payment terms between an international seller and a buyer. LCs have been around for 500 years, literally going back to trade in Europe, as I had mentioned, between companies and entities that didn't know one another when transit times were weeks and weeks and weeks on end. This is where letters of credit were originally founded. So an LC, it's a financial instrument. It's a payment mechanism. Just like you might, if you're an exporter, give a customer terms, 30 days, 60 days, 90 days, or if you're an importer and your vendor overseas asks for 30% up front and then 30% when a BL gets cut. A letter of credit is just another payment term. A little more complicated from a detail perspective, from a documentation perspective, but definitely it's a payment instrument, a financial instrument, and it's used by buyers and sellers. We emphasize quite a few times throughout this presentation that letters of credit are equally applicable to importers and exporters. It's just a matter of what side of the transaction that you're on. The principles are the same, the concepts are the same, the details are the same. And the overarching theme of today's presentation, whether you're an importer or an exporter, or a freight forwarder working with importers and exporters under LCs, know what you're getting yourself into. Make sure that what you commit to within a letter of credit, you can execute upon, and then make sure everybody in the organization understands precisely what it is you're doing. Second bullet, next to cash in advance, a documentary credit, which is just another name for a letter of credit, is the most secure way to get paid on an international sale. We'll see why in just a moment. To clarify in our sub-bullet here, you'll hear lots of different terminology in today's webinar that essentially are synonymous. They all mean the same thing, but it's just confusing when this terminology gets used without having a clear understanding of what it means. Let's say that documentary credit and a letter of credit, or an LC, it's all the same thing. It is a synonymous term. It's no coincidence. You see here that the official term for an LC, a documentary credit, look at this word here, document. Everything as it relates to the details of a letter of credit are associated with the documents that define a specific transaction, a bill of lading, a commercial invoice, a packing list, a certificate of origin. It's all about the documentation. More on that in a second. By its very definition, and I mentioned this briefly a moment ago, use of a letter of credit requires the involvement of the international banking system. There is absolutely, positively no way around that. If you're going to engage in an LC as either the seller or the buyer, there's going to be at least two banks involved. Your bank and the bank of your customer overseas if you're an exporter, or your vendor overseas if you're an importer. There could be more than two banks involved. For the most part, you want to avoid that type of situation. We'll explain why in upcoming slides. But you can't talk about a letter of credit without knowing that the international banking system is involved. Let's move on. Why is the international banking system involved? Think of it this way. First bullet point. Essentially, a letter of credit is used to replace the creditworthiness or lack thereof of an international buyer with that of a bank. Well, what does that mean? Let's look at it from an exporter perspective. We could even look at it from an importer perspective. But let's say you're an exporter of agricultural products from the Central Valley here up in Central and Northern California, and you have a new customer, pick a country randomly, South Africa as an example. You don't know that customer. You've not done business with them before. You don't know if they're credit worthy or not. You don't even know if they exist as a company. You have to do your due diligence, what the banking system calls KYC, not KFC, KYC, know your customer. But a letter of credit can be used to mitigate the risk of not getting paid by that customer, be they in South Africa or Malaysia or Brazil or Canada or Mexico. It doesn't matter. You are asking the banking system to stand in for the creditworthiness of the overseas customer and use that banking system to make sure you get paid. Same applies as an importer. If you have a new vendor, let's say you're looking to stop sourcing or seek new sourcing opportunities outside of China, and you go to some place like Malaysia, you might have a vendor that says to you, I'll sell to you all day long as it's on a letter of credit. That vendor, that seller overseas is asking the banking system to stand in as a go-between to mitigate the risk of not getting paid. That's what a letter of credit does, basically. Let's get into some more detail on that subject. A bank, first sub-bullet point, undertakes to pay the seller, and the seller could be you, that agricultural exporter in the Central Valley here in California, or the vendor overseas that we just spoke of. But a bank undertakes to pay the seller based on performance. Here's a term that has a very specific meaning within the world of banking and documentation. Performance has to do with the clarification of a definition, because sometimes people think that a letter of credit, the bank is guaranteed to pay me. That's not the case at all. A letter of credit is not a guarantee of payment, but rather a promise of payment based on performance of certain responsibilities. Performance, in that sense, takes us to the third bullet point. The true meaning of performance under an LC is related to documentation. That's why it's called a documentary credit. As we'll see in just a minute, banks don't interest themselves when they're involved in a letter of credit with the physical movement of goods. They're only interested in the documentation that validates the physical movement of goods, a bill of lading for an ocean freight shipment, a commercial invoice, a packing list. We mentioned a couple of examples already. We have a full list at the end. Whenever you think about a bank undertaking to pay based on performance, it means that the seller, no matter where they are, the seller has to present certain documents to the bank in order to get paid under a letter of credit. What are those documents, and what do those documents contain? That is up to the process of negotiation that goes on between the seller and buyer long before a letter of credit is issued, or long before goods move. Remember, performance is about documentation. What documentation? The documentation you agree to with your customer or your vendor overseas. It's a negotiation process. Let me see if we have any questions just yet. It's probably a little early. Just one second. Yeah, we're good. A little early for questions. Let's move on. And we have some slides here, so we're not going to dilly-dally. Continuing on with this conversation on the definition of letter of credit. I like to use a principle, and I always cite people when I borrow their terminology or things that they made up, but this one I came up with, so I'm kind of proud of this, actually. Documentation performance is driven by the seller, the exporter, basically, their timely presentation of complete, consistent, and correct documents. Yet another overarching theme for our webinar today is presenting all of the required documentation for a letter of credit in a complete, consistent, correct, and timely fashion. Complete, meaning that all of the docs that were agreed to be included for presentation for a letter of credit, they're all there. Bill of lading, commercial invoice, packing list, certificate of origin, phytosanitary certificate, etc. Consistent. The content of those documents have to be consistent with one another, meaning you can't say 50 pallets of almonds on a packing list and then show something different, 2,000 cartons on a commercial invoice. The information has to be consistent amongst itself and consistent with what was agreed upon within the letter of credit. And those docs have to be correct. They have to be a specific and accurate reflection of the transaction itself. The 3 C's of documentation. Second bullet. This might sound counterintuitive. When I started in letters of credit so many years ago in downtown Boston, on my home port, it was certainly counterintuitive to me. Banks don't concern themselves with the physical movement of goods. They're only interested in the documents. because they're only interested in performance, and performance is about the presentation of complete, consistent, and correct documentation. To reiterate, that is precisely why an LC is also known as a documentary credit. To summarize, the type and number of commercial and or transport docs, meaning commercial invoices, packing lists, etc., versus a bill of lading or an airway bill, that's based on negotiation between the seller and the buyer. A super important point to make, whether you're an importer or an exporter working under a letter of credit, you have to deal with the terms of the LC as part of an overall sales agreement. There's a big difference between a letter of credit and a sales contract. Letter of credit just deals with terms of payment. Sorry, a sales contract deals with a bunch of different things. We'll talk a little bit more about that in just a bit. This is an important reiteration to make, because you might ask yourself, well, what docs, what do they contain? Whatever it is you agree to, that's what they contain. Starting to wrap up our definition of letters of credit, banks, and I'm sure this will come as no surprise, are for-profit institutions. They're not engaging in acts of altruism when they substitute their creditworthiness for that of an overseas buyer or seller. Banks charge for letters of credit. That's something that you also have to have very clear with your bank that you work with, be you an importer or an exporter, so you know how to budget for certain charges. We'll talk about the names of some of those charges some slides down the path here. For now, just be aware that banks charge a series of fees for engaging in an LC transaction. There is no altruism, there is no benevolence from the banking system when it comes to LCs and most anything else, which I'm sure you already know. We already said, we'll talk about them in just a minute, a number of types of letters of credit that can be used. The one we're going to talk the most about is the most common one. It's called a confirmed irrevocable letter of credit. We'll see that in just a moment. The type of LC that is selected will determine the specific role of the banking system in completing payment. Here's some important support documentation that you need to know about when it comes to LCs, all the rules when it comes to letters of credit. It's actually published by the International Chamber of Commerce, which is the same outfit, the same organization out of Paris, France, that publishes the Incoterms. That ICC, International Chamber of Commerce. When it comes to LC transactions, and if you're an importer, an exporter, a freight forwarder that deals in letters of credit, you should at least have an online version of this. I'll give you a tip. You can pay for this through the ICC, and I have no affiliation with the International Chamber of Commerce. If you look hard enough, and if you Google cleverly enough, you can find a PDF copy for zip for free. That's what I did online. The one that you want, it's called the Uniform Customs and Practice for Documentary Credits. It's called the UCP 600. That's the most recent version. It's important that you have that as part of your international trade library. All right. Okay. Let's get into the different types of letters of credit. I want to go through this fairly quickly because we're going to focus on that confirmed irrevocable letter of credit. The purpose of this section of the webinar is just to broaden your frame of reference to know that there are different LCs out there. As such, we're going to go through this fairly quickly. First off, an irrevocable letter of credit. And the only reason why I bring this up is because way back in the day, there used to be what was called a revocable letter of credit, which meant that either party between seller and buyer, as well as any of the banks involved, could change, amend, or cancel a letter of credit without telling anyone. As you might imagine, that kind of defeats the purpose of a letter of credit. So the only type of LC, and this is implicit as well as explicit, is an irrevocable letter of credit. Important for you to know. Nobody can change anything or create what's called an amendment. That's a term we'll see in a bit, but an amendment is a change to a letter of credit before the letter of credit is executed upon. We'll see more on that in a bit. But no one can change anything or amend. There's that term is very important. Without the agreement of the issuing bank, the confirming bank, and the beneficiary. You'll note here, you're starting to see some terminology that perhaps you're not familiar with. Don't worry just yet. We're going to go through all of the terminology as we noted in our agenda. Basically, the issuing bank, that's the buyer's bank. The confirming bank is the seller's bank. And the beneficiary, as is the term's meaning in an insurance environment, the beneficiary is the seller. If you're an exporter, if you're that almond exporter up in the Central Valley and you're selling to a company under an LC in South Africa, you are the beneficiary. Once again, we'll see that terminology in a minute. It starts to pile up a little bit, and this is why I made that comment that it can get confusing pretty quickly. Second bullet, second definition, an unconfirmed letter of credit. This is where things start to get interesting and really defines the involvement of not only the buyer's bank, but the seller's bank as well. An unconfirmed, as the name would intuitively signify, only carries the obligation of the issuing bank, I put that in, the buyer's bank, to honor all drawings. A drawing is just when you present the LC and you want to get paid. Basically, and we have a visual, a graphic of this, if a bank confirms a letter of credit, that is typically the seller's bank in the export country. As the name would indicate, a confirmed letter of credit is an undertaking by that U.S. bank to effect payment based on what? Performance, the presentation of documents. If a bank in the U.S. doesn't confirm that, and you have to make that determination before a transaction takes place, it won't be confirmed, obviously. They're just going to tell you that a letter of credit has been opened on your behalf. We'll see more of that, a lot more of that actually, in just a few minutes. But as we see in our sub-bullet, the seller's bank only advises that an LC has been opened on their behalf. It's not an undertaking to pay by the U.S. bank as an exporter. It's simply an advice. They will facilitate the transaction. They will get the funds from the issuing bank, the buyer's bank overseas, but they're not undertaking to pay. They being that U.S., your bank as an exporter in the U.S. All right. Some of these subsequent definitions will help to clarify that point because it can get a little murky. I'll be the first to admit that. A confirmed letter of credit. And this is the highest grade, a confirmed irrevocable letter of credit in terms of mitigating risk. That's a letter of credit with a commitment of payment in addition to that of the buyer's bank. Let's continue with our agricultural export example. We have a company up in the Central Valley. We sell almonds overseas. We have our bank that we work with, and it's really important to have a good relationship with a bank, whether you're an importer or an exporter. And our policy is that we like to sell under a confirmed, as we'll see in a moment, irrevocable letter of credit. That means that the funds don't come originally from the buyer's bank, that issuing bank, but if we present our documentation in a complete, consistent, and correct fashion within the time frames allowed, the bank in the U.S. is going to pay, and then they're going to collect from the bank overseas. That's a good example of how we said earlier that the banks are substituting themselves for the creditworthiness of the customer. To achieve the highest level of risk mitigation from a payment perspective, we as the exporter want a confirmed irrevocable letter of credit. Of course, your bank in the U.S. is going to charge you to do that. But for that extra peace of mind, it might be worth the charge. Let's look at some of these subpoints before we move on. Payment, of course, it's always the case under a letter of credit, is based on performance. And we now know that performance is about the complete, consistent, correct, and timely presentation of the documents that we agreed to with our customer overseas or our vendor overseas. The confirmation will normally come in the beneficiary's country. As we said a moment ago, the beneficiary is you as the exporter in our almond exporting example. So that bank, the confirming bank, ideally is going to be your bank, the bank that you work with. It doesn't have to be this way. But a bank that will advise you that a letter of credit has been opened on your behalf will also confirm the letter of credit if that's what you stipulate. You have to stipulate that, and that's what we'll see in our example coming up. And of course, I just said this, the advising bank can also be the confirming bank. Let's take a deep breath here and look and see what we have for questions. Typical opening and processing for a documentary credit is still around $600. The short answer would be yes. Depends on if you want a confirmation. There's going to be an advising fee. I can tell by the question that you already know this. An advising fee, a confirming fee. Since someone brought up the thing about fees, here's what you really need to look out for. Amendment fees and discrepancy fees. We're jumping a little bit ahead here, but it's a good question as a segue into this conversation because the bank charges can really, really pile up. An amendment is a change to a letter of credit before it is executed, before it's presented to a bank for payment. What's an amendment? We want to change the quantity of the sale. Instead of 10 tons of almonds, we can only ship 8. We want to change the Incoterm in the letter of credit. We want to change the address of the buyer overseas. Once a letter of credit is issued but hasn't been acted upon, any changes require an amendment. And because it's implicitly an irrevocable letter of credit, everybody has to agree, the banks are going to charge you to do that. That's an amendment charge, an amendment fee. Of equal, if not greater importance, is what's referred to as a discrepancy fee. We already said a couple of times, and this is why I was so emphatic, that your LC documentation, your commercial invoice, your packing list, the bill of lading, etc., has to be prepared with all the information pursuant to whatever the letter of credit says, right down to the letter of the product description, as an example. Anything in the documentation that is inconsistent or incorrect with the letter of credit is called a discrepancy, and there's a fee for that too. I was going to wait a bit to jump in on that one, but since it was such a good question to bring it up, we decided to do that. I've seen letters of credit for $25,000 that weren't handled very well, meaning the value of the LC, the value of the sale was $25,000. With bank fees, legitimate bank fees, advising fee, confirming fee, et cetera, plus amendments, plus discrepancies of $2,000. Think about that. A sale for $25,000 of almonds, and we have $2,000 in bank fees, $1,500 of which never should have happened if we handled it right in the first place. That's what you need to be looking out for with letters of credit. And that's actually how freight forwarders can help you. Be you an exporter, definitely as an exporter, but potentially as an importer as well. Because and this is where I learned about LCs, because I was a freight forwarder working with companies that exported under a letter of credit. Think about it. They prepare the airway bill. They prepare the bill of lading. They have to make sure that what they prepare is consistent, complete, and correct to the terms of the LC. And if they're a good freight forwarder, they'll double check your documentation as well, the exporter's documentation, make sure everything's good. They'll prepare a site draft for you, which is basically a bill of exchange, a check written payable to yourself as the exporter, and present that information to the bank. I first learned about letters of credit when I was a young executive just starting out in my home port of Boston, where I worked downtown on State Street, doing letters of credit in a small office. And we had that small office downtown because, I'm dating myself here, you had to walk the documentation to the counters of the bank. And this is where Bay Bank was and State Street Bank. So it was just convenient to have our office down there because we did all the documentation, double-checked the exporter's documentation, prepared it all up, and took it to the bank on their behalf. And part of our job was to make sure we minimized the amount of discrepancies that our export customer suffered. Bit of a sidebar, but relevant given the conversation. Let's move on. Here's the big one, the most commonly used LC, a confirmed irrevocable letter of credit. That means that nothing can be changed unless all the parties agree, buyer, seller, the banks that are involved, and it's confirmed by a bank in the exporter's country. If it's an import transaction. We are the buyer here in the United States. The vendor overseas is the one who's going to ask for the confirmation from their bank. In our example, as the almond exporter, we're the beneficiary. We're the ones who are saying, yeah, we know it costs a little bit extra, but we like that additional peace of mind, and we want to have the LC confirmed by our bank, which in addition to that peace of mind, by the way, if we do everything correctly, 3 C's of documentation, we'll get paid sooner because we don't have to wait for the issuing bank overseas in South Africa, in our example, to send the money to the bank, my bank in the U.S., and then they send it to me. It might be only a couple of days, given the electronic formats used these days, but I've seen letters of credit for a couple $1 million where 2 or 3 days where you get paid sooner means a lot. We're interested, for our example, in confirmed irrevocable letter of credit. Let's run through some of these other ones just to make you aware of them. Standby letter of credit, as the name would indicate. You could have a situation where you're an importer, that your vendor overseas, let's say you found a new vendor in Malaysia, and they're saying, well, we'll give you credit 30 days, 60 days, 90 days, but we want a standby letter of credit that's kind of off to the side. We won't use it unless you don't pay us. It's there on standby. It's a good tool to use. I've seen them. I've used them myself. You can give terms or get terms as a buyer, but the seller still has the peace of mind of a standby letter of credit. A revolving letter of credit. You see this quite a bit in the ag business, agricultural exports, where people are selling in large amounts, oftentimes to the same customer over an extended period of time. Essentially, an LC, a revolving letter of credit, is automatically restored to its full amount. Let's say an LC was for $1 million, and during a harvest season, we made 6 or 7 or 8 shipments, all for different amounts of money, drawing down on that letter of credit. Well, when that $1 million is out, it automatically gets restored. It's called a revolving LC. A back-to-back letter of credit is actually, by definition, a transaction that involves 2 LCs. You see this fairly frequently when there's a middle person involved. Let's say there was a broker involved in that export example of almonds to South Africa, where that middle person will take out an LC, will get an LC from the buyer in South Africa, and then use that letter of credit as collateral to go to a bank and open an LC on behalf of the actual grower in the Central Valley. We should probably pick a city or a town in the Central Valley instead of saying the Central Valley all the time. Let's go with Modesto up in the Central Valley. That's a back-to-back LC. Here's one. I include it. I have to confess, I've never seen this once in my career, but it's out there as a definition. It's called a red clause letter of credit. And it is an LC that allows a bank to pay the seller in advance of presenting documents. I don't know why that would happen, to be honest, because it defeats the purpose of a letter of credit. But it's called a red clause LC. And then a transferable LC allows the beneficiary to act as a middleman and transfer his or her rights to another party. You have to decide, be you a buyer or seller, what type of LC you're going to use. The most common one is a confirmed irrevocable letter of credit. That's the one we're using for our example. Okay, we've suffered through our definitions and such. Let's get down to some visuals and start to explain at a high level, as we see here, what the LC process, how that LC process works. I'm just checking questions here. Is there a recording? Yes, there is a recording. You can write in. We'll send you the link. Yeah, please send me the presentation. Yeah, as we said, now for the 3rd time, people are welcome to a copy of the presentation. You can write in at the end of the event. But here's the deal, because I know who's online. If I see somebody, I just thought of this, by the way, and I can see who's online, how long they stayed, did they drop off, what questions they wrote in, the whole 9 yards. If someone drops off and then asks for the presentation, I'm contemplating not sending it to them because perfect attendance matters. It certainly mattered when I was in school. I'll decide on that later. Let's stick to the game plan here. This is a high-level letter of credit process. You'll note in the middle, it says a sales contract. We mentioned this briefly. I'll say it again for effect. There's a big difference between a sales contract and a letter of credit. A sales contract is just that, all of the terms associated with a sale. A letter of credit is the payment term component of a sales contract. An LC should be baked into the overall agreement between the buyer and the seller being the exporter, for all intents and purposes, the buyer being the importer. Here's what happens. Long before an LC gets issued, the seller and the buyer are going back and forth about quantities and price and Incoterms, and is there insurance, any variety of things. Once they make that determination, and within that sales contract agree that a letter of credit is going to be used, what type of letter of credit is going to be used, what the details of the LC are, what documents are required, the buyer goes to their bank in their country. We'll continue to use our Modesto almond exporter. The company in South Africa is going to go to their bank, which is referred to as the issuing bank, and do what? Fill out a letter of credit application. These days, and let's bear this in mind, from this point forward, everything we're talking about can be done online. Everything. Way back when, and this is why I worked in downtown Boston, in the banking district, everything was manual. And I'm talking way back when. So the buyer, our buyer in South Africa, in Johannesburg, would have to go to their bank and fill out an application pursuant to the terms already agreed upon between the buyer and the seller. The issuing bank, and it used to be via telex, and I'm almost embarrassed to admit that I actually used a telex. The only place you'll find a telex these days is at the Smithsonian in Washington, D.C. But the banks communicate with one another. After the buyer makes out the application, it's approved by their bank, the issuing bank. What's the issuing bank do? Send a copy, now all electronically, all online, to what is hopefully our bank up in the First National Bank of Modesto that we do business with. Depending on the type of letter of credit it is, our bank is either just going to tell us that an LC has been opened on our behalf, advise us, or if it's a confirmed letter of credit, they're going to say, hey, this LC has been opened on your behalf, and pursuant to your wishes and what you negotiated with your buyer, we're going to confirm that letter of credit. And if you present your documents in a timely, complete, consistent, and correct fashion pursuant to the terms of the LC, we'll pay you first, and then we'll get the money from the issuing bank. That's what a confirmation does. That's really how it works. We have a more detailed visual of the documentation flow in just a bit. We just wanted to present the high-level piece for now. Okay, let's move on. Some key terminology and definitions. We're going to run through this quickly. You have to study this. If you're not familiar with letters of credit and you want it to be a part of your skill set, you're going to have to go back and study this stuff. And it takes time because it gets confusing, because these synonymous terms for essentially the same party or the same activity, this is part of the problem with letters of credit. I'll give you the first example. The applicant, that's the buyer. Think about other names for an overseas buyer. You have the applicant. You have the consignee. You have the importer of record. They're all the same party. For the most part, it just gets confusing. Same goes for beneficiary. We'll talk about that in a second. The applicant is the buyer or the party who requests a letter of credit to be issued. At the risk of going backwards, that's these guys over here. The beneficiary. Just think of it this way. Who's going to benefit from the letter of credit? Meaning, who's going to get the money? The seller, the exporter. It's also think about the terminology of an exporter here in the United States. The U.S. principal party in interest, the shipper, the seller, the beneficiary. It can get really confusing. The beneficiary is the party that's going to benefit, receive payment from the letter of credit. The issuing bank, fairly intuitive, that's the buyer's bank, basically, that issues the letter of credit on behalf of who? The beneficiary. We talked a little bit about this already. An advising bank, is simply a bank that advises the beneficiary, the seller, that a letter of credit has been opened on their behalf. As you'll see in our example, it's not an undertaking to pay. And that advice letter, as it's called, that the advising bank will send must explicitly state that the bank is acting in an advisory capacity with no engagement to pay. That's the difference between an advising and a confirming bank, which can be the same bank. In fact, if you're the exporter, you want it to be the same bank, because here's the general rule on letters of credit. The more banks involved, the more fees involved. Ideally, you want to keep it to your bank and your vendor or your customer's bank overseas. That advice, we have an example of it, we'll show it in a minute, is a written communication from a bank to a beneficiary, the seller, advising that an LC has been opened on their behalf. As we said, the confirming bank, and I won't apologize for going through this level of detail, because as I said earlier, if you don't understand this terminology, be you an importer, an exporter, forwarder, bank, insurance company, and we have all of 4 of the above online today, you're just going to get confused and you won't be able to create any value, to be quite frank about it. You have to know this terminology. It's just that simple. It's like a vocabulary test in English class, basically, but you have to know it. The confirming bank is normally in the country of the seller, and normally the seller's bank, ideally. It's the bank that undertakes to pay contingent upon presentation of stipulated documents, also known as performance. It will be explicitly stated in the letter, an advice letter that now becomes a confirmation that the bank is undertaking to pay based on that performance. The confirmation is a written communication to the beneficiary from a bank that states the bank's undertaking to pay contingent upon performance. A bank's written confirmation, as we will see in our example, is included in the advice letter. I see a question here. Are U.S. banks, foreign U.S. banks, still dispatching hard copy physical docs to the corresponding bank overseas, or have they finally gone electronic? The answer is they have finally gone electronic. But just like customs, when you do an electronic entry, if you're an importer in the United States, they reserve the right to ask for documentation, so they can do that. But it's all online. Good question to ask. I think we're good on questions for now. All right. The negotiating bank. Here's a term that gets really confusing, because when we in business think about negotiation, we think about just that, a back and forth between a seller and buyer about the terms to a sales contract. And that's a reasonable assumption to make. But in the world of letters of credit, that's not what it means at all. The negotiating bank, or a negotiation, as we'll see in a moment, the negotiation bank is the bank that examines the documents to look for discrepancies so they can charge you more, whether to honor or reject the presentation. That's oftentimes the confirming bank. It should, if there's a confirmed letter of credit, it has to be the confirming bank. So negotiation, we'll skip over reimbursing for a second, is the act of a bank examining documents for compliance with the terms of the LC. The reimbursing bank is most often the issuing bank, the original source of the letter of credit, that they make the funds available to the negotiating bank. In the case of a confirmed letter of credit, our export example of our almond people up in Modesto, we present the docs to the bank, everything's good, they pay us pursuant to their confirmation commitment, and then they go back to the buyer's bank in South Africa and collect the money. As we used to say back in Massachusetts, the chase is on. But it's bank-to-bank transaction, so it's very, very commonplace. Okay. We already said these two, so we can wrap things up and move on. An amendment is a mutually approved change, addition, or deletion to the terms of an LC after its original issuance, but before it gets acted upon, before it gets presented to the bank for negotiation. You make any amendments to an LC, $50, $100, you have to negotiate that with your bank if you're the exporter for certain. A discrepancy is any error, omission, or inconsistency associated with the document stipulated by an LC. And the last two, this is how you get paid, really. And this is electronic also. But way back in the day, what used to be called a bill of exchange, think of a check. Envision a check in your mind right now. But if you're the exporter up in Modesto, it's a check made payable to yourself. When your documents get presented to the bank, either physically, like I used to do at the counters of the bank back in Boston, or electronically, that documentation package needs a site draft, and it's just a check made payable to you for the amount of the letter of credit. And that's what I used to do in Boston. In fact, when I was preparing for this webinar, it brought back so many good memories, because I'd do the LCs all morning, make sure the docs were right, make sure the bill of lading was right pursuant to the letter of credit, do the site draft, and then go over right before lunch, present to the various banks. You could go to 3-4 banks depending on who your customers were in the course of an hour or so. And then, here's the good part, would walk a block over to Faneuil Hall, which if anyone's been to Boston, especially in the summertime, it's just where everyone goes to lunch and hang out and what have you. And I would oftentimes spend more of time over at Faneuil Hall than I did going from bank to bank, but that's a story for a different day. Every documentation pack either has to have a site draft or a time draft, which is the exact same thing, but it stipulates that instead of being able to collect right away at site, as the term is used in the case of a site draft, we're saying to our customer, yeah, it's a letter of credit, there's a draft involved, but because we agreed to this, I won't get paid for 30, 60, or 90 days. Essentially terms with the backing of a letter of credit. That's another thing you need to decide as either a buyer or a seller of goods. Most LCs are on a site draft because people want to get paid right away, but you can certainly use a time draft. Big difference between the two. All right, let's look at a letter of credit. I made this as big as possible. Look, it's pretty sizable. I'm font challenged myself, so I'm sensitive to those things. I'm just looking at questions here. Okay, we're good. All right, we're going to spend a couple of minutes on this because it's a summary of everything we talked about. This is an export letter of credit, as the title indicates. But once again, all of the principles, all of the techniques, all of the requirements are applicable to you as an importer or to you as an exporter. It's just a matter of what side of the transaction that you're on. We chose, for time limitation purposes, to do an export letter of credit for a company going to Poland. What we have on the right is a boiled down version of an LC. What we have on the left-hand side is the advice/confirmation from the bank in the U.S. Let's see who we're dealing with here. And you'll start to see the terminology that we painstakingly went through come to life, and you'll be saying, oh, I'm glad he did that, because otherwise I'd be really confused, and it wouldn't be your fault. Who do we have here? This is a fictitious bank. First Bank of the East. It's in Atlanta. And their SWIFT number, this is their ID number within the banking system. And I always screw up this acronym, but is the System for the Worldwide International Financial Transactions, something like that. It's a communication standard used in the banking system, so banks know that when someone reaches out to them, originally by telex way back when, that this is a legit bank and it's not some kind of a scam. That's their SWIFT number. The System for Worldwide. That's going to bug me now. Someone look that up, please, and then type it into me so I don't lose my mind and get distracted while we're in here. The International System for Worldwide International Financial Transactions. I think. It doesn't matter, but it's going to bug me, so someone type that in, please. What else do we have? The bank is providing an advice number. It's just a reference number. The date, and with letters of credit to the extent that you can, as well as any type of documentation related to international trade, you want to spell out the month, or at least the 3 letters. This is 15 July XX. I just left that so I don't have to change the year every time I do this presentation. We have an amount in US dollars for $101,500. Here's where we start to see our terminology. The beneficiary is the exporter in the U.S. Made-up name, Telecom Essentials in Atlanta. Who's the applicant? The buyer overseas. Europecom Equipment at an address in Warsaw. Moving on, bearing in mind that this is an advice/confirmation from the seller's bank in Atlanta. We, meaning the bank, have been requested to advise to you the following letter of credit as issued from the First Bank of Poland, Lech Walesa Boulevard in Warsaw. Who are these characters? The applicant's bank. So the two banks here will be communicating with one another, sending money to one another, and this is the seller, this is the buyer. There's a credit number, again, a reference number. Every letter of credit has an expiration date. The first thing you have to look at, is it consistent with the expiration date that we agreed to as part of our negotiation? Spelled out. Please be guided by its terms, meaning the LC, and by the following. Credit is available by negotiation of your original draft at site. This is a site draft for 100% of the invoice value drawn on us. Evidence shipment of, and this is the product description that has to appear verbatim on every document that is called for in the letter of credit. No matter what your system says when it prints out a commercial invoice, could be a completely different description. This is what you agreed to on the LC. This is what it has to say. 20 climate-resistant enclosures for telecommunication equipment. These are the big things that you might see at a street corner, at an intersection, where Verizon or AT&T or whomever has these big giant plastic enclosures on the telecom equipment they have on the street. That's what we're talking about here. That's the description you need to use. We have an expiration date of the LC itself. We have a latest ship date of the 20th of August, let's say of 2020. All banking charges outside of Poland are for the beneficiary's account. That means amendments and discrepancies and anything else. That's quite important. Here's where it gets juicy. At the request of our correspondent, meaning the bank in Poland, we confirm this credit and also engage with you to that all drafts drawn under it in compliance with the terms. Performance, as it's called, will be duly honored by us. Who's us? The company in Atlanta. So Telecom Essentials, they do everything right pursuant to the LC. They're going to get their $101,500 a lot quicker because it's a confirmed letter of credit. Okay, let's move over to the side, the actual body of the LC. You'll see at the top, message type 700, issue of documentary credit. This is a template used by the international banking system whereby the terms of a letter of credit will change from transaction to transaction, but the layout is going to be the same. FLD stands for field, and these are the various numbers. Don't ask me why they're not sequential. I've tried to find out that answer for the better part of my adult life. Haven't been able to. But any letter of credit, if you look at field 27, the sequence of the total, that just means one of one page. This is a boiled down LC. They can be longer, but for illustrative purposes, I made it shorter. Form of DC, yet another source of confusion. In the logistics world, you see the term DC, you're thinking distribution center. At least I would. Doesn't mean that here. It means documentary credit, which, as we saw in our definitions, is a synonymous term with a letter of credit. It's irrevocable. So we know it's irrevocable and confirmed because they said so over here. Here's that DC number, the documentary credit number, the date of issue, 15 July, applicable rules, UCP latest version, expiration date, October 5th. We saw that over here as well. All the information about the applicant, the buyer, all the information about the beneficiary, every document that gets issued for this transaction, regardless of what our system-generated commercial invoices and packing lists look like, have to read exactly like this. Or you're going to hit, as the exporter, with a discrepancy fee. Whatever's in here has to be exactly the same on the documentation. Complete, consistent, correct, and timely. What's the amount? $101,500. 39A field, percentage credit amount, TOL stands for tolerance. That means, and you have to negotiate this, by the way, 2%. That means that when you present your site draft, the amount could be plus or minus that $101,500 because maybe there was a transportation charge that you weren't aware of. You want to give yourself a little bit of a tolerance. Good best practice there. It's available with the First Bank of Poland. We know that. partial shipments allowed, transshipments allowed. That gives flexibility to the seller. If you're an importer, depending on where you're buying from, you might not want to agree to that. And these are negotiable. Partial shipment means you get half your stuff, and then they'll ship the rest later. As a buyer, you don't necessarily want that. Transshipment means that your goods don't go directly from wherever they're going from, wherever they're originating from, to where they're going. An ocean container might get taken off a vessel in Singapore and put on a feeder vessel going to Malaysia. These are negotiable. You have to decide what's best for you. This is an air freight shipment. The departure shipment is Atlanta. Discharge airport Warsaw. Latest ship date. The airway bill has to be dated on or before August 20th, or that's a discrepancy. Here's the description of the goods that have to appear identically on all of your documents, including the airway bill and the Incoterm. 20 climate-resistant enclosures for telecom equipment, CPT, Warsaw Airport, air freight. This isn't an Incoterms webinar, but I look at this and I see CPT, Warsaw Airport. What that tells me is that the price of the air freight from Atlanta to Warsaw is included in this $101,500. That's exactly what that means. If the exporter didn't intend to mean that, then they have a problem. They need to get an amendment, and they'll be charged for that as well. Here's your docs requirement: original and 2 copies of the commercial invoice, 1 original of the airway bill, 2 copies, marked freight prepaid, original of the packing list. Why is this like this? Because that's what was agreed to. They could put in a certificate of origin. They could ask for a pre-shipment inspection, they being the buyer overseas. This is what was agreed to. And then finally, payment at site, docs presented within 21 days of airway bill date. This is a good, solid example, albeit fictitious, of a letter of credit, along with its advice and confirmation letter. This is real. I just changed the names around, to be honest with you. This is a pretty good example. They can be more complicated, obviously, but we'd be here for way too long. Let me see if we have any questions. All right. We're good. Let's move on. Here's a good visual, a little bit more detailed, and I know we're getting to 11:26, but as always, for people who have attended before, I usually run over 5 to 10 minutes. I hope you can stick around for the crescendo ending that we have for you. This is an export letter of credit, documentation and information flow, applicable to an import transaction. Again, it's just a matter of what side of that transaction you're on. We have the buyer in South Africa. We have the seller in Modesto, and I know these plants are looking a lot like polluters, but we're going to have to live with that. We're going to start on the outside in blue, and it's numbered, as you can see, 1, 2, 3, 4, and then we're going to come back on the inside, 5, 6, 7. We're assuming that the overall terms of a sales contract between the exporter in Modesto and the buyer in Jayburg have been completed, and a letter of credit was the agreed upon payment term. What happens from there? Now all electronically. Our customer in Jayburg does what? They go to their bank. They go online and fill out an LC application pursuant to the terms that were agreed upon ahead of time. That's the issuing bank. The issuing bank electronically, by using that SWIFT capability, the System for Worldwide Interbank, System for Worldwide Interbank Financial Transactions. I'm so relieved. They're going to send that to our bank up in Modesto, or in the case of our Atlanta example, the bank in Atlanta. The advising, negotiating, confirming bank ideally is all the same bank. When you have too many banks involved, too many cooks in the kitchen, it gets confusing and the charges start to mount up. Best practice as an exporter, you want the same bank to advise, confirm, and negotiate your LC. It's your bank. That's who you want to do that. The interbank communication gets sent electronically, and then it's sent electronically on our account, basically online with our bank, so we see the LC. We, as the seller, receive the letter of credit. The first thing you have to do, is it consistent with what was agreed upon from the get-go? If it is, we ship the goods. Remember, banks don't care about goods movement. This is a freight forwarding thing. They're going to do the bill of lading, etc., pursuant to the letter of credit. This is a separate issue. Here's what happens. Goods start moving. The seller has a commercial invoice, a packing list, a certificate of origin, a phytosanitary certificate, the bill of lading. Why all those documents? Because that's what they agreed to. And it's not unusual to have a phytosanitary certificate or a fumigation certificate as part of an agricultural export. The seller gets the BL, the original bill of lading, from the forwarder, puts it together with their documentation, and does what? Sends it to the bank electronically. As we said, freight forwarders provide this service. And I'm biased because I did this and I saw the value in it. The forwarder is very likely going to prepare the bill of lading or the airway bill. They can make sure it's right, pursuant to the LC, and they can make sure that your documentation is right as well. They're providing an additional service. They're going to charge you for that, but it's good. It's worth looking into. The docs get sent to the bank electronically. If it's a confirmed letter of credit, the bank's going to negotiate, meaning check the documents for compliance with the terms of the LC, complete, consistent, and correct. If they are, they're going to effect payment under a site draft, and then the chase is on with the issuing bank. The issuing bank pays the confirming bank, and the buyer pays the issuing bank. That is how a letter of credit works in a nutshell. So a pretty decent slide there. As I said, we're going to run over a couple minutes, and no one's dropped. So thank you for sticking around. Let's run through this. There's 5 or 6 slides of any consequence here. What do you need to include in your letter of credit, whether you're an importer or an exporter? What are the clauses in the letter of credit itself that you need to check the box on? Letters of credit are comprised of a series of requirement clauses in the LC that, as we said, are agreed to in advance. Sometimes banks and even countries can stipulate certain inclusions like a pre-shipment inspection. That's a separate consideration, but it's certainly the possibility exists. To summarize what we've been saying all along, the requirements in a letter of credit have to be a reflection of the original agreement between the U.S. exporter and the overseas customer, or the U.S. importer and the overseas vendor. The terms of the LC have to be negotiated between the seller and the buyer prior to completing the application with the issuing bank. If you're an exporter, you don't want your customer going to the bank or going online and filling out a blank application willy-nilly, because they're going to check every box that's in their favor. You have to make sure that it's agreed to ahead of time. Otherwise, it's just going to delay things and take more time. Do your homework. Here's some of the clauses. Let's run through these quickly. We're almost finished. What kind of LC is it? Confirmed irrevocable. We like those. Name of the issuing, advising, and confirming bank. Of course, the 2 banks that we saw in our example, full address. Applicant and beneficiary details, full address. Description of the goods that are going to be used on every single document that is presented to the bank. Quantity and unit of measure. 2,000 cartons, 50 pounds apiece of almonds, as an example. How much is the credit for? In our example, for the Warsaw shipment, it was $101,500. What's the currency? USD. We saw that. You want to be explicit about that too. Percentage of variance allowed. We saw that. It was 2%. Doesn't have to be. Could be 1. Could be 1. Could be higher. What's the payment mechanism? Is it a site or a time draft? Tying things back into my favorite subject in all of international trade, you have to stipulate your Incoterms 2020 rule version. Here's the most important part. What are you going to agree to in terms of the documents that have to be presented? For customs clearance purposes, which is a separate deal from what we're talking about, the bare minimum pursuant to the World Customs Organization is a bill of lading or an airway bill, a commercial invoice, and a packing list. So that should be your bare minimum for a letter of credit. It depends on the transaction. In agricultural exports, you'll see stuff like phytosanitary certificates, certificates of origin, etc. It depends. You have to negotiate that. You may or may not want to designate a freight forwarder. That's not required. As a freight forwarder, they like that because they know they're going to handle the freight. What's your mode of transport? Air freight, ocean freight? and instructions on how to prepare the bill of lading or airway bill. Transshipments allowed, partial shipments, yes or no. If you're the exporter, you want those to be yes. If you're the importer, you typically want those to be no, just as general guidance. What's your latest ship date? What's your last ship date for presentation? The bank upon which drafts are to be drawn. Where do the documents have to be presented? Is it at a downtown bank on State Street in Boston or someplace up in Modesto? Who pays the bank charges? What's the expiration date of the LC? And you always want to say that the LC is subject to UCP 600. 11:35. We'll be done by 11:40. In fact, there's 3 slides to go. So again, thank you for sticking around. And we only lost 1 person. So I'm feeling good about myself. Potential documentation requirements. This is how we're going to wrap things up, because a documentary credit is about the documents. You have to agree with your overseas customer or your overseas vendor what those documents are, bearing in mind that depending on the country of origin, what the bank wants to see, they can stipulate documents as well, pre-shipment inspection, things of this nature. So let's wrap it up here. The documents required, we know this, for a letter of credit depend on the negotiations between the seller and the buyer. We already said the government could have their requirements. A bank may also put theirs, but the vast majority, it's between you and your customer or vendor. So here's some potential docs. The first one, a pro forma invoice. If you were on last week, the subject of a pro forma invoice came up and how they can be used. A pro forma in a letter of credit environment is like a quote to an overseas customer. Our client for the almonds in South Africa needs a pro forma invoice to go to their bank and prove that there's an actual transaction. We said last week, a pro forma is an invoice that isn't a bill. They can go, they being the buyer in South Africa, to the bank and say, hey, I have a legit purchase I want to make. I want to buy some almonds in Modesto, California. Here's the shipper in Modesto. Here's all the terms. I'm going to use this as the foundation to apply for my letter of credit. Commercial invoice, consular invoice, especially if you're shipping, if you're exporting to the Middle East. Packing list, almost finished. Pre-shipment inspection, insurance cert. We have a bunch of insurance people online. If this, in our example, the Incoterm was CPT, if it was CIF or CIP, insurance would be required by the seller on behalf of the buyer. And that insurance certificate would have to read, for example, the description of the products, exactly what appeared in the letter of credit. Certificate of origin, maybe, phytosanitary we talked about, hazmat, we haven't mentioned that, but that would be important. Forwarder's cargo receipt, which as the name would indicate is proof that a forwarder received the cargo and will be subsequently providing an airway bill or bill of lading. Dock receipt, same thing. Well, actually it's not. Dock receipt for containers being tendered to an ocean terminal. Airway bill, ocean bill of lading, certificate of vessel eligibility. The original LC, that would be very helpful. Time draft or a site draft. Let's see if we have any. Hold on a second. Oh, we have a question. Hold on. This is the last slide, by the way. Let me see what the question is. Can we use the contract date number as reference to the goods listed on it? Or we need to list all the items of the goods in the LC? Outstanding question. There's always going to be a field for a description of the goods. You should put in a brief description that makes it identifiable above and beyond just a reference number. Whatever that brief description is, grade A, Fritz almonds, and that's a certain type of almond, that's the description that has to be used on every single document that you agree to provide. Let me see if there's anything else. We're pretty much done here. Yeah, that's that. Okay. If you want a copy of the presentation, write to me here. If you want any help with anything related to international trade, all the stuff that we do at Trade Facilitators, write or call to me here. Next webinar. Every Wednesday, we committed to do one free webinar a week through the entire life of the coronavirus. Obviously, we want the virus to end for health reasons, for business reasons. I'm certainly in that camp. I want this thing to end because I'm running out of subjects to talk about. And if this runs into summertime, we're going to be asking people what their favorite color is. Next week, this is a good one. And it's actually related to last week's subject on material planning, the role of sales and operations planning in a global import program. That'll be a good one. I'm excited about that. With that, in all seriousness, I joke from time to time. Thank you. Stay healthy. Observe whatever rules are in place, plus, wherever you are. And let's get through this. In the meantime, please do take advantage of these complimentary webinars that we'll continue to do. If you have any other questions, you think about them after the fact, just write to me here. That's Dan D. Gardner, TradeFacil.com. Double check one more time for questions. That's it. All right. Thank you. Stay safe, stay healthy. Take advantage of the downtime to reconnect with the people that matter most to you. Thanks. Have a great rest of the week.